Pretty good session in the end.
Very nice session, James. Our market up by 0.7%, but I think looking at the smaller stocks, that's really where we saw the outperformance. The mid-cap index up by 1.2% and the small-cap index up by 1.1%. And this is a trend that we've started to see emerge in 2014, and it's not surprising given that the large end of the market is now starting to look quite expensive. So in the year to date, we've actually seen the ASX 200 index down by 0.4%, while the mid-cap index is flat and the small ordinaries has managed a gain of 0.7%. Now, the outperformance by the small cap index is really because of those gold stocks. Now, gold stocks have been well supported in 2014, really in the run up to that Lunar New Year where the Chinese do buy gold gifts. So the challenge for gold is going to be after the 31st of January on whether it can sustain that momentum. But we've seen Perseus Mining just in the year to date in 2014 up by 70%. We've seen Troy Resources and St. Barbara Mines up a massive 35%. So those stocks with high leverage, the outperformers in the market. Light volumes today, not surprising given we saw the Martin Luther King Jr. holiday in the US last night. But US futures have been looking good during the Asian session, up by 0.4%. And of course, the Shanghai Composite's been doing well during the session. We've been watching the PBOC and they have injected $255 billion worth of liquidity into the system. That's the most that we've seen since February 2013. It's not surprising given the time of the year in the lead up to that Lunar New Year. But in terms of sectors, the banks bounced back. That was good to see. In the financial space, though, it was the wealth managers which were the clear outperformers. If we have a look at the top 5 stocks in the financial space, it was Magellan Financial Group, Platinum Asset Management, Challenger Financial Group, IOOF and Perpetual. And it's not surprising given that we are seeing forecasts for the market to increase by about 10 to 12% in 2014. The discretionary sector also doing well, but that was led by some of the education stocks like G8 Education as well as Navitas. On the downside, those iron ore prices slumping. Not good news for the iron ore miners. We saw Fortescue, Atlas down by about 4%, but altogether a pretty good session.
Commodity-related stocks, when the price of the commodity is on the way down, where does that leave iron ore stocks, particularly after today's performance?
Well, iron ore prices, if we have a look at immediate delivery to China, reached the lowest that we've seen since around about July last year, so 124.80 US a tonne. And there's a number of factors influencing this market. First of all, we have been seeing a tight credit market in China, but secondly, ramp up by the major miners, and that includes the likes of Fortescue, Rio Tinto, as well as BHP, which have all increased production of iron ore over the last quarter. And then lastly, we've also seen high port inventories as well. Just having a look at those iron ore stocks, and they have had a pretty good run up given that prices have held up fairly well. And if you have a look at those 3 big miners, BHP, Rio Tinto and Fortescue, they're still profitable at that 100 US a tonne level. So even if iron ore prices fell by another 25%, that'd still be quite profitable, especially in the face of increasing production. I guess one of the things we look at with iron ore is the Shanghai Composite, and that's because the material sector and the Shanghai Composite do tend to move together, with the Shanghai Composite tending to be a leading indicator of where the material sector is heading. And if we have a look at what's happening in terms of those two indices at the moment, we are seeing a bit of divergence. Now, this is the Shanghai Composite over the last 2 years on the top, and just in the blue, I've got the Australian Materials Index. And if I just overlay the two, you'll see what I mean in that they do tend to move together, with the Shanghai Composite usually leading. So you can see Shanghai Composite peaking and then bottoming, the material sector are bottoming here and then peaking, and they tend to move together. But if I just expanded and zoom in a little bit closer if I can, what you will see is just recently, I'm not going to be able to do it, is recently you've seen the material sector holding up fairly well, but the Shanghai Composite Index, of course, dropping down in the black there. So that divergence means that we're a little bit cautious on materials, despite the fundamental outlook looking pretty good and the earnings outlook looking pretty good. We could be in for a correction in that second quarter of 2014, especially if that divergence does continue. So just watching that a little bit closely.
Michael, are you cautious? Buy on any pullback for you?
I guess looking at a lot of quality stocks at the moment, they look expensive, and that's to be expected in this part of the cycle. And if we have a look at this part of the cycle, it's an inflection point where we are starting to see earnings growth coming into the market. So you shouldn't be surprised to be paying expensive multiples for quality companies. The key is to choose those companies that are going to have momentum in terms of earnings growth over the next few years. So not just looking at the next 1 year, but continued earnings momentum. And I think if you're choosing stocks like that, you'll do okay. This part of the cycle, it's very hard to find cheap stocks, quality companies at very cheap levels. What you're probably looking for in terms of strategy are those stocks that are looking reasonable value but still have a good growth profile in store. Crown is one of that. The Macau business does mean it does have exposure to overseas earnings as well, and the thing to remember with Crown is it has exposure to that lower Australian dollar, which is also a positive for it. But don't forget the other gaming companies as well, because Crown is expanding aggressively here domestically in Australia. That also means companies like Aristocrat Leisure and Ainsworth, which looks at the gaming technology, will be big winners out of that as well.